In today's video, I'll walk through a live setup that's looking like it's about to trigger inside of our index markets. Now, on my grid chart here on the top left, I have the S&P, top right, the NASDAQ, bottom left, the Dow, and then bottom right, the Russell. And what we're looking for in terms of our setup, it's quite simple. There's two different components or pieces of it. The first is we want to see price cross the sign entry line, which the NASDAQ just did. Looks like the S&P is about to do it as well. The Dow a little bit further away, and then the Russell so far the most away in terms of hitting the sign line. So the S&P now has also crossed our entry line. So far the S&P, the NASDAQ have crossed it. The Dow just triggered it right now. So as of this moment, all three of the index markets outside of the Russell have breached our volatility box. That's what we would call this. Now that's part one of the setup, is we want to see price cross this sign entry line. Part two, after this cross actually happens, is we'd like to see price prove to us that it's going to stop inside of the volatility box models, in this case the scalper, and we're going to see a reversal. The way we see that proof is by using our overbought oversold indicator, which are those green and red arrows you see on the chart. So that's called the edge signals indicator. So as of right now, we have a breach in the S&P, the NASDAQ, the Dow. It's looking like the Russell is about to get there pretty shortly. We have no edge signal across all four markets thus far, so we're still waiting on that. Now I imagine I'll go back and probably add some background music or something in the editing phase here. This video is just going to be a whole lot of watching price action unfold in front of us, and I'll try and add commentary wherever possible, but there'll probably be a lot of silence throughout different portions of the video. So far, like I said, just to remind you, we're now looking for an edge signal on the S&P, the NASDAQ, and the Dow. The Russell has not yet breached our sign entry line, but if and once it does, then we would be looking for an edge signal in that market as well. So that just gives you an idea of what we're looking for before it takes place. Now, on the other side, let's just talk through this, but if price continues to keep selling off and goes outside of those orange clouds, then that's our sign to adapt to the new volatility condition, get out of the scalper models that we're currently on, which you can see with the white labels, and instead switch to something a little bit more conservative, which next up after the scalper for us is the aggressive volatility box. So that's our plan of action. As of this moment, if we see that edge signal confirmation before we go outside of the clouds, that's basically our entry trigger to get inside of this trade, and we need an entry price at that sign line or better. So we have risk to reward skewed in our favor, essentially. If that doesn't happen and price keeps selling off, like it looks like it may in the S&P, so far that NASDAQ candle looks pretty bearish as well, but we're still inside of the clouds, then that would be our sign to adapt to volatility. All right, so the Russell has also breached our sign entry line at this point. So now all four index markets are essentially live with volatility breaches, and we're looking for that edge signal confirmation on any one of these four markets. So let's see if we get it in at least one or two, and I think that would hopefully make for some good demonstration in this video as to managing the trade and things of that nature. So far, this current candle looks a little bit less bearish compared to the previous candles, looking like the buyers are starting to come in, at least inside of the S&P, the NASDAQ, and the Dow, where we actually have potential entry prices. So far, the Russell is breached, but we're not at our sign entry line, meaning we don't really have an edge there, even if we did see an edge signal at this point. All right, so that's our first green candle in quite some time. Now let's see if we can get that edge signal confirmation forming, at least on one or two of these markets. And most likely, if you're watching at home, feel free to fast forward through this once essentially the setup does trigger, just to see what happens. Right now, real time live, there's a whole lot of waiting involved and just being patient and sitting on your hands, waiting for that signal to come in. But at home, you have the luxury of things like playing this back at 2x speed and whatnot. So I apologize for the silence, but that is what it is. We're still waiting for the edge signal confirmation. So we're starting to see glimpses of that green arrow forming. You should have just seen that on the S&P. If a green arrow can finish printing, then that's our sign to actually get inside of this trade. So far, the S&P and the Dow are giving us that edge signal on and off. We'll see what happens as this candle finishes printing. The Russell, same thing, but the Russell is well above our sign entry line, so we don't have an edge there yet. And we don't see anything inside of the NASDAQ as of this moment. So the arrow did not finish printing, so we're still waiting. So far, it's looking like this candle now may potentially give us that arrow. Let's see. In the case of the Russell, I think we may have already hit our first target before seeing that confirmation. Yeah, so at this point, the Russell already fell inside of our sign lines, and we had that very quick bounce. So the Russell's already hit what would be the first target without giving us an entry. So we can continue focusing our energies on the S&P, the NASDAQ, and the Dow, looking for that edge signal to take advantage of a potential bounce here. Let's see what happens. Hopefully we can get it, because again, that would make for a much more interesting video than not having one. All right, maybe this might be the candle on the S&P that actually gives us that confirmation. So far, it's looking like it's going to hold and finish printing with the candle. Let's see. So if that does happen in the S&P here, we can see that our price is better than the sign line, meaning as soon as this candle closes, we can enter the trade, given that we have a price that gives us a nice edge. Our stop would be outside of the orange volatility box clouds, and our target on the upside is the same amount that we're risking. So the S&P finished printing with the edge signal confirmation, so that is now officially a trade that is live, and I've gotten filled on that S&P contract. Let's keep waiting just in case we get another market here between the NASDAQ and the Dow that gives us a potential entry. And then what I will most likely do after this hour closes right here is fast forward in the editing phase so we can actually see what happens. Either we hit the target or we hit the stop, and I'll try and get some lines on our chart so it looks a little bit clearer as to what we're looking for. The NASDAQ so far is looking like it's perking up. Same thing with the Dow. The Dow most likely on this candle may finish printing with that edge signal as well. It just printed off. Let's see what happens. It's flashing on and off, but if the Dow finishes printing as well, then that too is an active setup. Again, price is better than the sign entry line, so we have an edge. Stop is outside of the orange volatility box clouds, and we're looking for that same move for our first target. Okay, perfect. So that's in. So now the S&P and the Dow are officially live and valid trades. The NASDAQ, so far, we don't have the edge signal confirmation. If we see it before hitting target 1, then that's our opportunity to get in. I'll repause the video if that does happen. And then the Russell has already hit the first target, so the Russell we can ignore. So at this point, the S&P and the Dow are the two places where we actually have a trade that's active and live and our rules have been met. Excuse me. Now again, just as a reminder, for our targets, we have the first target, which is the amount we risk, If we do hit that target, then the stop gets moved from outside of the clouds to break even, and our second target, our stretch target where we'd like to see price just run up to, is the gray target line on the opposite side, that gray dashed line. That's where if price can get to it, that would be a nice home run sort of trade, especially given the amount we had to risk on this particular trade inside of each of these. Alright, so at this point now, I think I'm going to stop the voice recording, and then I will leave price action running in the background so we can see what happens, and I'll try and speed it up just a little bit, so this video at the end is not something like an hour or 2 hour long video. Alright, we'll come back in, let's see what happens. Quick little update. So far the S&P has hit its first target, but the Dow has not. So as of right now, the S&P, we hit T1. Our stop is now moved to break even, which is our sign entry line price, or even a few ticks above that if you want to protect a bit more. And our second target is at that gray target line. So at this point, it's risk-free, it's house money, just risking unrealized gains. We're looking to see if we can make a move up, just a final little push up. And the Dow has yet to hit its first target. So if the Dow can also lift up, that should hopefully help at least the S&P hit the second target on the trade. The Nasdaq and the Russell, as we can see, have already bounced up, never saw an opportunity to actually get in. So those two markets, we never had an entry. S&P hit the first target. Dow not yet hit the first target, waiting on that stop still outside of the clouds. Normal T1, normal T2. All right, let's see what happens now. Another update here, that latest candle was supported with the plus 1000 tick reading, and the S&P hit its second target. So that was a plus 12.25 on the second contract. The Dow, with that same plus 1000 tick reading, has also hit its first target, and we're now making our way to the second target with the break-even stop, similar to what we did in the S&P. So this hopefully gives you an idea of how the trade is shaping up. So far the S&P now is completely closed out. We've hit T1, T2, no remaining contracts, assuming you're not trailing your stops or something of that sort. And inside of the Dow, we've hit just the first target, and we're waiting now for that second target to be hit, playing with house money. So let's see what happens there, and I'll do that last update based on what happens with the Dow position. Alright, so the final update here, the Dow also hit its second target, which was good for a plus 87 on that second contract with the break-even stop. So those are the sorts of trades that we're looking for with our volatility box breaches. Hopefully this video gave you a step-by-step walkthrough of what we were looking for. In this case, we started with the S&P, the Dow, the Nasdaq, and the Russell. We had breaches in all four markets, but only two that met our rules. With the two that met our rules, we had opportunities to enter. We hit our first target, moved our stop up to break even, hit the second target, and now the trade is officially complete. We repeat the same thing every single day. It doesn't always look this pretty. We of course hit stops as well, but this should give you an idea of how price unfolds real time. Alright, hope this video helped. Take care everyone, good luck trading, and we'll see you in the next update.